This is your Wall Street wake-up call. Global stocks are up as OPEC comes to the consensus that cuts to production are needed. Here with more is Spencer Welch, an oil analyst at IHS based in London. So Spencer, not a lot of details here, but OPEC production is set to be reduced to a range of 32.5 million barrels a day to 33 million barrels per day compared to the 33.2 million produced in August. What's your reaction to the deal?
Morning. I guess surprise, like most observers of the oil market. Only on Tuesday, OPEC was saying that there wasn't going to be a deal and that they were just talking and that nothing would happen till November. So quite a surprise that they have come out with some numbers, although, as you've just said, it's only a relatively small reduction from where they're producing at the moment.
It is a small reduction, although do we know who is bearing the brunt of these cuts? Which nations are involved?
That's the key question, and they have said that they will agree that in November. So I would imagine that it's going to be spread amongst the different nations, because Saudi Arabia fundamentally said we're not going to do this on our own, but if other people are willing to share the cut, then we are willing to be involved. But a key point is that Saudi Arabian production naturally declines from summer into winter by about 500,000 because they need less for air conditioning. So that summer-winter transition makes up most of this cut number anyway.
Interesting. That's a great point. I mean, do you think that that's perhaps the key reason why Saudi Arabia was perhaps willing to play ball here?
I think so. I think that's probably a significant influence, is that they know that they themselves are it's normal policy for them to cut at this time of year. If we were talking now in the winter about moving through into the summer, it might be a different situation. So Saudi Arabia effectively, it doesn't really impact them, but yet they can demonstrate that they are making a cut, and presumably others are going to do something as well. They're going to contribute to make up the gap.
Now, like you mentioned, details are set to be announced at the November OPEC meeting, but of course a lot could happen until then, and there have been trust issues with these OPEC members over the past several months. Oh, a deal is going to happen, it's not going to happen. So can we really trust that this deal stays intact over the next 6-7 weeks?
I think it will stay intact. I don't expect any more announcements between now and then. The key thing is going to be what happens in November, because they've promised that there's going to be agreement on a country by country basis. So that's a big thing to live up to, that they've said they're going to deliver in November.
All right, and we're seeing oil prices surge on this news. Does this sort of deal change your outlook for oil in terms of price?
Not really. Prices went up by about $2.50 yesterday on this announcement. They've eased back a little bit, but they're still around $2 up. Our expectation is that the market is still going to stay around about $45 to $50 through the fourth quarter of this year. So it hasn't significantly changed. The market is very finely balanced between supply and demand, and we don't see a significant change in that, even looking right the way through 2017.
All right, Spencer Welch, an oil analyst at IHS in London. Spencer, thanks so much for your analysis.
Thank you.
I'm Scott Gam, and you're watching The Street.